All right, Jason, thanks again for joining us.
Happy to be here.
Everybody right now is wondering whether or not we're seeing Bubble 2.0 after the LinkedIn IPO. Now others are going to be going public. Everyone's got a different opinion. Where do you fit on in this whole bubble talk?
Sure. I think it's a little premature. I can't say that I'm an expert from a deal perspective or an investment perspective, but clearly there's a ton of innovation going on all over the world in the tech sectors, and that means there's a little bit of a gold rush. I think the way I look at it, rather than just being a bubble, is there's going to be a lot of bad ideas that are going to be funded because there's so much money out there. And what I mean by that is it's not only the traditional VCs that are funding companies now. You have people who have made money who are now angel investors and doing deals way before it gets to the VC stage. But as you saw last week with LinkedIn, it did so well. I think people are going to start to push up their IPOs, maybe rather than selling. And I think it's still a wonderful time for innovations. The one business in technology where you can't rest on your laurels. It constantly changes. I can't say we're on the verge of a bubble. I still see some great companies out there, but I'm also amazed at some things that get funded.
Well, for the longest time, there was the justification was these companies are profitable, but after you get out of that dozen or so companies that are profitable,
sure,
what you're talking about is the potential.
Yeah. Well, back in the, there's ones that don't necessarily have a revenue model, and but have good product, and then there are ones who just have bad ideas. Before the first bubble burst, back in around 2000, people used to say, why would you ever want to show any revenue? Because then they know what you're worth. I think what you're seeing in sort of a Web 3.0 is there's real revenue models going on in this business. LinkedIn is a good business. Obviously, you've heard about Groupon and Living Social and some of these other things. They're making real money.
I spoke to one big technology fund manager who said he's concerned about valuations getting too high, but he still bought LinkedIn shares last week. Did you buy LinkedIn shares? Do you want to own that stock?
Sure. I'm of the school who believes that by the time it hits the IPO, I'm a little too late. Obviously, that was not the case with LinkedIn or years back in Google. Certainly, if you talk to some of the traditional VCs out there, or even people who are schooled in early investing, the valuations are very high. It's really an entrepreneur's market right now. If anything, you'll start to see that come down.
How does that affect where you're investing in new companies and new innovation right now?
Sure. So I just started angel investing around a year and a half ago, and I am by no means an expert. So I think I put aside a little money in businesses that I really understand the product in. So my specialty is really around the creative experience, strategy and business development, and also how you position the company. There's going to be a lot of failures that I invest in as I learn, and I try to get in very early, where not only my cash is part of the equation, but also how I can help a company. So I haven't had to deal with outrageous valuations yet.
Let's talk about one other aspect here. You were the co-president of MySpace.
Sure.
MySpace is a business that News Corp has been looking to sell.
Yep.
During this whole question about whether there's a bubble or not, do you think that's increased the value of MySpace or increased the number of people who might be interested in buying MySpace?
Sure. Well, clearly I can't talk about the specifics of who's interested in it, but MySpace is still one of the biggest pockets of traffic on the internet, even with its recent lull in traffic growth. You have to have someone who has bold ideas and willing to sort of change and reposition the company. I don't think it has a huge impact on it. I still think it's tremendously valuable because for a price, you're going to be able to get 30 or 40 million users where you really couldn't for a new company.
What would be the strategy for a new owner of MySpace? I mean, how would you take advantage of that huge audience in this changing world?
Sure, there's so many different ways. I mean, basically what Mike Jones and I, Mike Jones, the CEO of MySpace currently, was my partner there. We were really looking to reposition the company out of the race with Facebook, who had really won the social networking game, and really around an emerging activity, which is social entertainment. You and I becoming connected through likes. It's more about what you're into rather than what you're up to. But there's so many different models that could work for a MySpace. If it was a social gaming company, which is very numbers focused, it's all about ROI. Can you bring down your marketing costs by transitioning people on MySpace over to gaming companies? I'm sure there's lots of different kinds of companies that are looking at it, have all disparate strategies, and it's not so easy just to move traffic, but if you have a good plan and good creative, you can.
bottom line, you think News Corp is going to ultimately find a buyer with a price that it's happy with, that everybody's happy with, you think?
Certainly, by all public accounts, they have a process going on, and I certainly don't want to affect that, but they're pretty smart people over there, and they'll do some good stuff, I'm sure.
Let's also talk about movies. Everybody's busy talking about which movies are doing well, summer box office,
sure.
But there are some huge changes coming to the movie industry, too, and it's an industry you're watching closely. What is the single biggest change to the industry that you're most focused on right now?
Sure. There's a couple of them, actually. I think, if you looked at for years and years in media, there was sort of print and television and movies, and now you've got so many different activities that are going to, for the user's time. So you have the internet, you have console gaming, you have social gaming. The movie experience needs to expand and be a better experience than it has been. That's not only in the quality of films, but also in price points, but it's also in the theaters. When you go to a theater, what does a theater do to sort of make it more of an entertainment experience? Often when I go to the movie theater, I have the same stress that I have when I go to the airport. Am I going to get the right seat? Is there a line for the candy? Is there some sort of interactivity that you have when you're there? So in general, the movie-going experience, and that just doesn't mean 3D, which is, this sort of, I think, silver bullet that the movie industry has been looking at to move everything into 3D and up the ticket price. So clearly, digital distribution is also a major area. You see the emergence of Netflix, the downfall of Blockbuster. Streaming these movies are going to be a big deal. In January, I was at the Consumer Electronics Show. And when you walk the floor, you basically see the emergence of the home theater in a major way. These huge screens, 3D, surround sound, interactivities with the screens, merging internet with television. I think a big area is going to be how a premium VOD works. And what I mean by that is a studio is going to release movies directly to the home, and for a premium price or soon after the theater. And there's been a lot of talk about that. And then finally, marketing. Right now, you don't see the film business bringing down the cost of movies too much. Even as technology has made it easier to make films, you're still seeing movies cost a ton, as well as marketing costs, $20 to $40 million in television expenses to break a film. How can they really enact and use social in such a way to bring down marketing costs? And I think recently you've heard Mark Zuckerberg talk about the next area that he thinks that Facebook and general social networks will transform are going to be the entertainment and media businesses. And I don't think that we've even landed on Plymouth Rock on our way to Los Angeles in what social networks and in general social activities on the internet can do to the entertainment business.
What would be a simple way to think about how the studios will make money in that new world? We've heard all these ideas so far, but I think people still scratch their heads because at the end of the day, so much of what they take in from a movie is still tied to how the movie does in those first couple of weeks at the box office.
So the movie business still, breaks that movie in the theaters, and then ultimately the value horizon that a movie makes from home video and VOD has to do with how well it does in the theater. There's a couple of ways to take advantage of it. One is that the movie business needs to look at new kinds of products. Is there a clip-based model? Could you cut your movie up into lots of different pieces and have an ad model around it? And every single piece of content, a clip on YouTube or a clip on your own website, is a conduit to the long form. So it's another way of making more value out of what you do. But also in general, how do you actually access the influencers online? If you know who the horror fans are or who the ones that love romantic comedies, how do you get them to spread the word in a way that television still doesn't do? Television is a place where you get tremendous lift off of a spend to gain notoriety for a film, but it's also very inefficient in that, the old adage, 10% of my advertising worked, I just don't know which 10%. There's a way that social, and if Hollywood embraces the Valley, frankly, or the technical community, there's a way that they could really be efficient about spreading messages.
Certainly there are cases where that's true. MGM, you're on the board.
Yep.
They're embracing somebody who knows Silicon Valley and the ways of tech.
They were very smart, of course.
I know you can't talk specifically about MGM, but you mentioned Netflix. What do you think of the prices Netflix is paying for its content? Do you think that's going to continue for the foreseeable future?
I think there'll probably be tiers. A lot of people think that their payment model is unsustainable. It really depends. You've heard a lot of talk out of the studios recently where they're not happy with their Netflix deals. I have sort of issues with that just because if you weren't happy with the deal, don't do the deal. Netflix has done a wonderful, wonderful job on a very limited library on around streaming. They're a business that's so interesting to me because they are disrupting themselves. They were a mail-order DVD business essentially a year ago, subscription business. Now they've moved to streaming. They don't have the titles that they have in DVD and streaming, but they know that's the future. But what they do more than any other company that I've seen of recently is that they put in front of you movies that they think you would like, even though you're not necessarily looking for those titles. They know a little about you. They see in the choices that you've made. I think in the future, what they've done recently by the deal that they did with Media Rights Capital on the House of Cards remake, they spent what was told to be $100 or $120 million to actually fund the production of something. That, to me, is a little bit of a flanker strategy around the fact that Hollywood was basically threatening to take away their titles and didn't like their model. I think there's going to be a tiered pricing system. Library will be cheaper than, sort of first run to video movies. And ultimately, I think Netflix is very, very good for Hollywood.
Let's talk about music quickly.
Sure.
We know that next week, Apple's holding its developers conference. Steve Jobs will be there, and it's expected we're going to get some details on their new digital music locker.
Yep.
Google and Amazon came out first, but it's expected that there could be some strong relationships between Apple and the music labels. What are you going to be watching for with that development next week?
Sure. Well, clearly Apple is in the lead seat. They have what is reported to be 70 or 75% of the digital music market. Most people we know who pay for music go through Apple. What I'm going to be seeing is really concentrating on the product. Apple has made buying music very simple, but when they've gotten into services businesses such as Ping was their social network around music, they sort of fumbled a little. I want to see how easy that service is to use, what sort of limitations the labels have put on rights and access, but they're certainly in the driver's seat. Good reviews for Amazon's cloud product, pretty good reviews for Google's beta product. But what I'd also like to see out of the music business is to start to see the major labels really start to coddle and help some of these startups. They've largely taken a tact of suing startups who they think are illegally using their music, or worse off, VC-funded startup companies that are making tremendous inroads in product and music. They are basically charging them so much money for the rights to the music that ultimately these companies don't have enough to innovate and market the services.
What are some examples of that?
Spotify is an example. Spotify is a service that's doing very, very well in Europe, purported to have over 1 million subscribers on a monthly basis, a limited amount of free music, and then you pay for the mobile service. It is sort of the cloud in that everything's available to you wirelessly wherever you go. It's not just uploading your music, which is what the iCloud service is reportedly about, but they've not launched in the US yet. They apparently don't have all the deals. And the major music business has a history of, having such onerous terms on their deals for rights that ultimately some of these great startups don't survive.
But it sounds like Apple might be closer than anyone else to getting deals with the labels. Correct me if you think I'm wrong. How are those deals, do you think, structured in such a way that Apple got the labels on board? Is it just because it's Apple?
Yeah, I don't know the exact numbers, but Apple is the 1,500-pound gorilla in the music business. I don't know that anyone cuts bigger checks to the record labels than Apple. So they are the number one partner. So it's obvious after that relationship that they would be some of the first to go. I think there was a race technically. I don't know how the deals are actually working. I think they're probably along the revenue share and the similar lines that you saw the pay stuff go. But clearly, the labels are booing Apple, but also cautious. It's very interesting in that the labels have always complained, like businesses like radio or MTV, for gaining too much power. And yet Apple has emerged out of nowhere to be the number one power in the music business. And the reason I bring up some of these startups is it's in the label's interest to fragment the dependency on one retailer. And therefore, they need to have a couple of these places succeed, including Amazon and Google.
When will we know if the labels have changed their tune, no pun intended? If things go well with Apple, will they be more willing to sign deals with others, or how's it going to work?
It's interesting because if Apple goes out first and they're wildly successful, the chances of other startups being that successful are not as great. I would have liked to have seen, and I'm a big fan of Apple. I use their products. There's stacks of them in my house. But I would like to have seen startups like Spotify, or what I love to see is Amazon and Google got out there early and gained some traction. That's just better for the music business. In general, though, I think if the music business has played with subscription, has played with the cloud idea, this isn't new. MP3.com, which was a startup way back when, used to allow you to rip your CDs and upload them to the site. The labels sued them into oblivion for hundreds of millions of dollars. So this is a little bit of a rehash of, I guess, too early business models or too early technologies. But my bet is on Apple to succeed.
Jason, thanks for your time.
Thank you.